Top news as of November 18, 2025. World. In Asia, Japan's economy contracted by about 0.4% in Q3 2025, its first decline in 6 quarters, largely due to weakening exports and ongoing diplomatic tensions with China. In Europe, the European Central Bank (ECB) has flagged potential repercussions from stablecoins and digital asset flows, especially as those financial instruments tied to U.S. assets could become systemically relevant. On trade and diplomacy, global stakeholders are debating whether current multilateral institutions remain fit for purpose in a polarized world.
Economy. Global business activity surveys show that while manufacturing is still ticking higher, the broader services sector is showing signs of improved momentum, hinting the global economy may be gradually stabilizing after earlier softness. Also, the World Bank and other institutions argue that small and medium-sized enterprises, SMEs, remain underfinanced, especially in developing economies, which could weigh on recovery. In one regional example, India is projected to grow 6.7% to 6.9% in the current fiscal year, underpinned by tax reforms, accommodative policy, and potential trade deals.
Finance. U.S. markets opened cautiously. Major indexes reflected investor hesitation ahead of key earnings, notably Nvidia, and delayed labor market data. Retail investor interest appears to be waning. Fewer are buying the dip this time around, as concerns over valuation and the sustainability of the AI-driven tech rally mount. On the horizon, Morgan Stanley raised its target for the S&P 500 to 7,800 for end 2026, citing strong AI capital expenditures and U.S. equity outperformance. Meanwhile, in corporate finance, Amazon plans a roughly $15 billion US dollar bond issuance, its biggest debt move in years, to help fund AI infrastructure build-out.
Technology. Tech infrastructure build-out is accelerating. Large tech firms are raising debt to fund AI-centered investments, as seen with Amazon's recent bond plans. A recent article enumerates agentic AI, systems that can reason and act autonomously, as a major technology trend for 2026 and beyond. At the same time, the tech rally is facing scrutiny, with valuations elevated and a concentrated handful of stocks dominating returns. Some strategists warn of a correction or at least increased earnings pressure.
Logistics. Although direct new headlines on logistics are less prominent today, the broader backdrop is relevant. Global trade flows remain under pressure from geopolitical tensions, supply chain restructuring, and tariff risk. In the context of the global economy and finance, disruptions in logistics and transport can amplify risks for exports, trade-dependent economies, and just-in-time manufacturing. For example, in the Greater Bay Area of southern China, Hong Kong retains its competitive edge in finance, trade, and logistics within the region.
Key takeaways. Markets are entering a cautious phase, with key earnings and economic data pending. Investors are adopting more defensive postures. The tech and AI story remains powerful but increasingly scrutinized. The AI ramp has to justify the high expectations. Monetary policy is still central. For example, Federal Reserve Governor Christopher Waller says the labor market is weak and a rate cut in December remains justified. For Asia-Pacific economies like India, and for logistics or trade-linked hubs, growth remains plausible but subject to external shocks. Logistics and trade flows may not be front-page news today, but they remain a latent risk. Any disruption, tariffs, transport bottlenecks, can ripple through manufacturing and global supply chains.